Good evening, all. This is Fatty Hemsey. It's Sunday evening, about 7 p.m. Eastern on October 2nd, 2022. I'm speaking with you from what's called Cape Naples, Florida. Do not try to Google it. You can't find it. It's an undisclosed location. Excuse me. We survived the Ian. Missed us by 60 miles. Admiral and I, we went about 6 miles inland, hang out with a friend of mine in Oak Estates. He's got a mansion there with a guest house and 2 generators. So we survived okay, let me put it this way. But the devastation you see out there is just amazing. It's just, I don't know. Climate change, temperatures are not changing, really? Okay. Again, data and science. Having said that, somebody just got arrested for pulling a gun in a gas station on somebody else because they thought they pulled in front of them. So the emotions are high. It's been difficult. We started on Wednesday, as you know, here with a power going off, and then I'm switching UPSs and shutting everything else off. We didn't have for 2 days. For 3 days. We had no Zoom, cutting them off. But here we are, back to normal. There are updates from Windows you want to take care of. Keys went out. These are part of my housekeeping stuff. Software keys went out for both Happy and HA. What do you call it? HA PDTS. And then hold on, let me see what we have here. Let me bring this over there so I can bring it out individually. Hold on, and then we're getting a little bit of a chat over there on the systems. Here's the reason. Are you with me, Sailor? 79 years of trading. This is MNQ, our flagship product. Day trading MNQs live, automated, 2 hours a day. Made this with loss ratio 1.46. 79 days, so it goes back May 5th. Live money. FCM is StoneX. It's friends and family. It's not even on our website. But we have statements to prove it from StoneX. StoneX is about 110 countries. The bank, I believe, is a city because they need branches in those countries, and it's for futures. They don't do the stocks, and they're not TD Ameritrade or let's say Fidelity, but in 110 countries, facilitating the commercials for their futures trading. It's really a pretty decent operation, but most of their business is not retail. You don't even hear from them. You have an IB in Chicago that trades it. It made $4,900 in that period. As you know, here's your where's my mouse? Where's my mouse? Murray? Where's my mouse, Murray? I don't know why it's causing this. Okay. Okay, whatever. Come on. The mouse has got power. It's not a mouse. Hold on. I'm sorry. Anyhow, look at the data. Bottom line is paid 414. Okay. What is going on? Yes, I'm sorry. I'm sorry. Let's start again. I'm stopping this. I can't control the mouse. Good afternoon, all. This is Fatty Hemsey. This is take number 2. We had a minor technical issue. It's at 7:12 p.m. on Sunday, October 2nd, 2022. I am chatting with you in one piece. Thanks to the universe. Had the Hurricane Ian miss us by 60 miles. But ran through here about 60 miles west of us, over the warm waters of Gulf. Of course, that's the major culprit right there. And of course, whatever else goes in there. I'm not a scientist in any field, especially not weather. So don't get me started with that fossil fuel stuff. But all I know is that we have never had so many people, and each of us use so much more power these days. That even in the fourth world countries, they're using phones for banking because there's no branch and checkbooks and all that. So, but they can borrow and do this micro banking on the phone. Guess what? It is a charger. So, anyhow, with One Piece, and we hung out at the friend's house, same place I was there in Irma. Irma was a drickhead, so I figured if we survive Irma, that's a good test. We're gonna survive this one too. And of course, Captain Admiral Tico was lead in the kind of a JSOC operation, the Joint Special Operations Command. He and two other dogs scanned the 5 acres we were on, and then my friend and I each had a AR-15. Mine was a 45 hollow point, 30 per cartridge, one in a chamber with a laser sight. So, and I think the range of about probably 500 feet into the laser itself. So once somebody sees the laser on their chest, I think they'll figure out they better get out of here. The place was on curfew, and it was alerted that they feel that some troublemakers may come from Miami to take advantage. That's what they did last time. Please be careful. So we just kind of guarded up a little bit. Food was good. We didn't have power for a couple of days. Then the power came, and I came back here, and then I started calling on Friday. I called I know president of Comcast from CNBC days, and so he too busy, I know, but especially with this issue. But one of his assistants got to me and said, "Listen, we'll take care of you, but remember, you're not the only one in trouble down there." But to their form, no promises. But by 5:30, 5:45 on the Friday, we had power, also internet. So I'm back. We've caught up, and we're happy to be here and present this webinar for you. It is being recorded, as always, will be posted on our YouTube channel right here. Best is to subscribe, because the moment we hit it, you get a note, okay, that, hey, this is available. Quickly, and that's why we get into trouble a little bit here. The hubbub on the websites and also on the Twitter is that we run a friends and family for small investments, hands-free, out of Chicago. And 5 months mark is here. The data speaks for itself. You can see it probably right now, right? Let me see the audience. Yeah, there's that. We're going to quickly shorten this one. Here we go. And you can see what's done. In 79 trading days, it's made 400% by turning 1239 into 5,000. This is the MNQ. Trades 3 of them. That's why your margin is 1239, 3 of them. And it's at peak now, peak equity. Why? It goes long and short. It doesn't give a what. It doesn't give a foxtrot. Let me put it that way. Exactly. We're talking phonetic alphabet. If you trade the 3NQ is bigger, brethren. It did 270, 296, almost 300%. Why? It took about a month later after we set up the second account. I mean, these monies are not mine, but the live monies are number of people in each category. But I just wanted to start with the one guy first, actually, an MNQ. Get my confidence up in this system house, because they approached me. I did approach them back in December. They do it every year or like twice a year. I told them I'm not ready. Wait until April 1st. They called April 1st, saying, "Are you ready?" I said, "Sure." I want 6 months under our belt. As you know, October 7th is when my grandma passed away. Is the day we rolled out this baby last year. And if I go here, you can see that timeline here. And so anyhow, it's coming around. But back then, we had very little time. December was only 3 months. I told them no. Wait, let's talk about in April. In April, they started, and then I said that you can't put any money in yourself. I said, okay, I'll find a friend to put the money in. Because you don't want to be third party. You don't want to be arm's length. Right? A friend of mine in Malibu threw in a few bucks, and he goes, "I really want to trade the NQ." I said, "Listen, we're gonna walk before we run. Let's do MNQ." And now he opened the 2 NQs for himself and his mom. Yeah. And again, it's free in the family. It's not on the website, but you could see what it's done. Now we have a number of my cigar bars, folks in the NQ. Again, these are friends. You see what it's done. The 12,000. The 12,000 margin has turned into has produced 36,000 profits in 4 months. And there's a page that shows all the detail. Little by little, there's a link on the website. Not on the website, on Twitter. of all the trades day by day. We update every night, and it goes forward. Okay, and yes, it is volatile. We have a very, very volatile market. Most Wall Street is upside down, but look what we have done, both long and short. It has some losses, but you can see we still win to loss ratio, and just by being disciplined, that is, you don't have a headache. I don't have to drop off the kids. Grandma's going to the airport. None of that. He just trades. Boom, boom, boom. 4 days a week, does not trade on Wednesdays. We're extremely proud of it. The problem is, as this end of a quarter data came available, it coincided with also software keys for the systems and the keys for the indicators, and this hit, and of course, Eon. So I lost 2 valuable days of work. It's actually 3. Yeah, because it worked until we will go okay until about 10 o'clock on Wednesday, and then everyone went nuts. No longer battery packs will keep up, and also our backup is wireless 5G. Verizon no longer has reception. So anyhow, but now we're at full gig on Comcast, and Verizon is pretty good. But at one point, I was just using the precious gas we had to drive to different cell points to get texts and get the messages and respond and move forward. Or did I just close this? Nah, I'm a schmuck. Hold on. No, hopefully not. There we go. So that's where we are. Very excited about that. We're still taking free trials if people are interested. And we're also raising our prices. That's called peak demand pricing. So I'm a student of Burton Malkiel, head of CEA at the White House, and head of department at my school. So this is peak demand pricing. We're getting too many people. I have no choice. I'm sorry, it's one of those. I gotta concentrate and work on the bigger fish than all the what do you call it, the minutia that's going on. And so the one way to do that is raise the price a little bit, not too much, just a little bit, but we're doing that. So we're also working on the next part of the puzzle, which is the post ORB in the afternoon, but I'm not going to get to it here. It's fairly complex. It's not ready. Actually, it's not distributable. It only will be offered on a video channel. We're trying to figure out which channel to use for that. We'll probably take the NQ down, the NQ Zoom, and convert that to that. And trades 24/6, including non-farm, GDP, all those times, really made for pre and post market. In the mornings for the news, and then one Wednesday afternoon a month for FOMC. It's a very interesting concept. It's an offshoot of what we have done, but it's not like ORB. Remember, ORB, again, trading talk. Open range creates certain opportunities because the cash is available. Bigger traders are in. News has priced in. Maybe you have a news pending. When those come in, you don't have that at 2 o'clock in the morning. You don't have that on 3 in the afternoon. But this software senses that. It is not a system yet. It is acting as an indicator. But it's good enough because the signals are very simple. The rules are very, very simple. It's not as complicated as ORB. ORB is a special challenge, provides opportunity, and yet you have to have many, many rules. As you know, we started something like 28 exits. Now we're down to 14. Let half go because we added another module. So our work is continuing. We're a little bit ahead of schedule, but I'm going to throttle back and truly test that the next month or so. So just telling you that's what's coming down the line. We did one for the economic calendar events. If let's say the system is going to trade on it it's not going to trade on Wednesday. We don't care. We're not going to be using it anyway. But let's say we're trading it on Tuesday, and at 10 o'clock there was a big news day. Let's say it's consumer sentiment from Bureau of Michigan. We was building a module to handle that, so that not to enter in a regular ORB until that news is passed. Have more data to look at, hopefully a little bit wiser decision. It turned out that at the margin it was not significant over a long number of trades. I mean, we talk about 400 to 500 trades. Basically, that's what we're doing a year. A year, we do about 500 trades, twice a day. I would say, a maximum of twice a day, maximum of 4 days a week. It doesn't trade on Wednesdays, and it's somewhere we're very, very high for us, like almost 500. But remember, we have about 355 calendar days, of which, if you divide it, it's divided by 7 multiplied by 5. That's the number of trading. I think it's 250, probably 240 area. So 500 makes sense, about 2 each. So, but each case is different. But we do a back test. Live test, these are live tests. You see what the results are. I get a little bit more live tests on my belt with this algorithm that we talk about. Right now, we work on some of these things and they don't go anywhere, and you just dump them. There's no glory in something that failed. So, but you don't know which one is going to work, which one is the door that you should answer until we get there. So, just wholeheartedly say no. It's a shortcut, and that's just being lazy. The research means that you look at every idea as good as the idea before or idea after. So, okay, econ calendar. As you know, we just started the Q4 calendar, and November 3rd is tomorrow. Earnings season is coming up. I believe 14th, or I think on the 14th morning you have Wells Fargo, you have JPM that opens the earnings season with the banks. I think probably next Monday or Tuesday you have Goldman Sachs and maybe Morgan. But those three are crucial that they start. JPM, Wells Fargo, and then Goldman Sachs. Then that starts our earnings season. The highest volatility will be seen here. That's why there's a little rush right now to get into ORB for the next 90 days. Not just the results have been phenomenal, but on top of that, people know historically what this thing did last year. People who sat there in the chat room, including yours truly. I was rubbing my eyes in the morning. I know I tweeted something okay. I didn't know it was this good. Now, the rest of it's true when we were in July. Let's just be very upfront. And I have no fear about talking about those days. Why? Because I have confidence in the system. As I always said, this system needs time, not money. Because it'll have babies. It's on track right now to be a 9x system. 9 times the entry value. So if you put 1,000 in, 10,000, no, sorry. If you put 10,000 in 2 years will be some 800,000. Because 10,000 is power of 9, and then another 9. How do I get to 9x? You extrapolate. If it's done 400% in 5 months, you're doing about 80% a month on the average, including a bad month of July. You covered that. Keep that in mind. Some people came in August, and everything is hunky-dory. They had no pain. As I said, what we have looked at 1 month a year is that. So you can't come in right near it. If you do, you just have to sit through it. If not, it's not for you. But once it recovers, then you're from house money. If you give back something, you give house money. Look at the payoff curve; it's continually risen because it has very simple, non-correlated rules. That's all. Anyhow, we'll do some webinars on that. I just want to let you know where we were. While all this was going on, I had a laptop with me. We did some work, but not a whole lot. Data was the main problem. All right, Bostic is talking tomorrow. Now, I also updated my list of the reserve guys. Bostic is from Atlanta. All right. So warm me up here a little bit. All right, so I have no clue what these guys are talking about except pulling on the fourth. But notice as they come on, the market just gives away. So sometimes I just wanted to say, get that stop box away from this guy. Don't get him out of there. Main one is going to be ISM. Institute for what's it? Institute for something management, right? I forget. Don't tell me I've got lost the mouse again. Hold on. Oh, there we go. What is happening with my mouse? Sorry, guys. There we go. Okay, there we go. Okay, ISM on 10 o'clock tomorrow. Come on. We have about 50, which is good. 52.8. Prior 52.4 consensus. 51.53. Listen, I think the Fed wants a little bit higher unemployment. This is a peak, and that's a problem. The wage. I'm not saying everybody's working. I'm not saying that. I'm talking about those who are willing to work versus the technology jobs are open, and I'm not technology. The specialty jobs are open, not just technology. That's not right. That we're getting very close to full employment. That causes inflation from a salary standpoint. We also have supply chain inflation, so they gotta get a handle on this. But I go with who? I'll go with Jeff DeGraff. He wrote this first chapter of my book, Advisor Source, and a student of the guy who also mentored me, Steve Shobin. Big guy in options and technical analysis. If you look at the PPI number from last time, I think we even touched upon this last time now. It looks to him, I've dealt with Jeff quite a bit. I mean, the morning, I used to get his morning brief and all that when he was at Lehman before I started Rentech. He's head of Rentech. Not the trading operation, but the research, Rentech research, Renaissance research, technology research. I believe him. I mean, he's a very thorough guy. He spends hours at this thing. And now this is his shop with his name on it. I'm sure he's got a lot of major clients he had before because he's a brand name. You're Jeff DeGraff, institutional investor, technical analysis of the year for 10 years. I mean, just some crazy number. Yeah. So he thinks that PPI says that the products at the producer level, that is what's coming in to be put into a system, is ticking down. That means they have less excuse to pass it on. And after the sales get a little softer, and then we really have seen the inflation behind us. Now, inflation data is not leading. Keep that in mind. It's lagging. So we just have to see it. So I would think probably not this month, but next month we should see that number. Now the market will sense that and get ahead of it. So we'll see what's going to happen. It has been basing since we talked last, and that's a problematic too, just going sideways. But at least it hasn't been dropping too hard. What else do we have? Construction spending should be important. I would look at it. I like that stuff, and manufacturing. So tomorrow morning is a lot of stuff. Couple of talkers. Williams is going to talk on Thursday, on Tuesday, head of the New York Fed. I would pay attention to that. I don't know who's Philip Jefferson. I think he's new. Mary Daly is San Francisco. Okay. He speaks for that. Okay, that's good. All right. OPEC meeting we have on Wednesday. ADP, early review of what's going on with non-farm. You got trade information. I don't care about the EIA. All I know is I want the price of crude is. Jobless claims as always. Forget EIA again for NatGas. Charlie. Oh, God, you're killing me. Charlie Evans talking at 1 p.m. from Chicago. Mr. Dove himself. Okay. John Williams again on Friday, right after non-farm. So Friday is going to be big. I think this is going to be one of the most crucial benchmarking time for the non-farm. To kind of saying, okay, here's where we are, where's the Fed is, what's the path forward? Can I tell you a secret? Can you keep it to yourself? Oh, this being recorded? Okay. Well, I don't think the Fed has any clue either. They're so behind the curve, it's unbelievable. So, you remember I was pounding the table, give me 100 point, give me 100 point? This is why. This is why. They start with a quarter, and then 50, and then a couple of 25, the 75s now. So, Jerome, if you're listening, get to work. Yeah, except it's taking too long. I'd rather have a V bottom. This one is drip, drip, drip. It's going to be a lot. I'll address our position too. Go to analysis first. Let's go to charts, timing charts. First one. All right. We're in the channel and we came back up and lost it. Remember, last Sunday night I went long. And I said for 2 or 3 days, obviously I was off. Now we're too close. You sell on Rosh Hashanah, you buy a Yom Kippur. That's the old saying on Wall Street. Rosh Hashanah was last Sunday. And we were oversold. And I figured, what if I take the other side? Because most of the time that is what everybody expected. I was wrong. I tried to be contrarian. I was wrong. Yeah. Thanks for it. And so, thanks. He's making comments about the Fed. Yeah. The PPI have an 18 months lag to CPI. I don't. Okay, you probably know more about it. I don't know about that. Okay, but yeah, I just have to research that. I just don't know. Yeah, but I know you do a lot of due diligence for it. So we'll take your comment as prima facie. Well, in the channel we're dropping. Here's the problem we're having. We're not getting any volume of any significance. But one of my thoughts for moving the webinar today to 7 was that if this thing is supposed to be any significance, this meeting tomorrow, we would have a possible leak, or somebody would sense it. Somebody will just kill the market right now. They have it. We're down. How much are we down? Hold on. About 0.5% on NQ, and on ES is half. Huh? What is that then? Oh, that's MNQ. Okay, what's the difference? Nothing. Well, percentage wise, okay. MNQ sold more. We're down about 0.3. What the heck are you talking about? Is that 10,000? Okay, yeah, okay. Okay, we're 0.3 on NQ. Looks like we're higher than that. 0.5 on MNQ. Remember, these are individually traded. There's 10 to 1. MNQ has got more volume, but you got a lot of winning nillies in there, and so sometimes they get out of whack, but ultimately they line up. Price is always the same, pretty much. I mean, 50 cents tops, 25%. But yeah, 0.3 here. Almost no change here on the Z contract for AES, and it also is positive. There's a very good possibility I'm going to put a trade on for PMT. Now remember, I gave a bias change. I did not pull the trigger. Why? The problem was that the type of a days we were having, and also I wanted the basing to be done. Did I put the trade on? I'm not going to change my bias. I'm not going in and out constantly with a time digest to anybody else, because the purpose here is that you're managing your retirement. You can't do that jumping in and out. You got to be measured. So I'm going to hold to that. If I go to a daily chart, obviously Friday was an anomaly. If you take Friday off, you could see we're just basing a little bit. So let's see where we are tomorrow morning. I'll have a trade ready, and it will be a call spread to a long side on a SPY. We already have the Qs on, but I think on that one we got a little bit also a hit. But we're not buying today or tomorrow. We're not doing weeklies. We're doing Decembers. We do further out. Correct. Fourth is just history. So extreme readings on Brett Truss. I haven't seen this. I've not seen this. Look at the reading of McClellan Oscillator here. Now, 923. That was when was it 923? Last Friday. I remember. Yeah. Not this Friday. We passed one before. Okay. You could see the reading there. It hit 414. Never seen that before. Never. And so the indicator jumped, but the price didn't. So what does it tell you? Any ideas? Come on, smart ones. I know a couple of you guys are very, very smart. Could be that breakfast they feed you. Can you tell me what happens when the indicator does this and the price doesn't? Any ideas? Come on, Cash. You went to Harvard. This stuff is easy. Talk to us. Give us some, enlighten us with your brilliance. You're close. Market inversion, no. But Genesis closer. Usually a good system also, it's indicator's turn first. You know why? You can't trade the indicator. You can trade the price. So if your indicator is not turning until after the price has, that's not an indicator. Okay, try that could be an anchor. Try to find a boat. You already have the anchor. You want the indicator to be early. Always, otherwise nothing. I was not indicator. I don't need lagging indicators. I need leading indicators, right? So, and that's not even mine, but I understand to analyze it because probably I've looked at McClellan study probably more than any other indicator, including my own. My own is, I think, including like CI that came years after this. But McDonald's also has been around since 50s, or at least early 60s. So to me, this setup says we're really basing here. Uh, but I want a setup. I'm sorry, I want an event. Well, what defines an event? I want volume. I want baby with bathwater out the window, where as Walter Deemer says, when it's ready to buy, you don't want to. Think about that. We're getting close. If we get somebody down, let's say there was a rumor that also some banks may not have enough liquidity issues. They would fail a stress test. And they feel that that's probably what test is for the subject is tomorrow. And some were alarmed that was a closed meeting. After further research turned out they do a lot of these. Just not open. It's not open to public. And so it could be nothing tomorrow, but I was hoping if somebody's going to go back bad, go now while we're down here. Get some huge spike in the volume or volume ratio, and we're done. We're not seeing it. So be careful. So I will be day to day looking at that. Now, some of you came in just now and asking for a trade. Hold it. You're not supposed to make any trade. It's in the videos in the first cycle. Oh, I paid for it. I know. I'm telling you a decade. Let me tell you what the rules are. Okay? You can be with me a long time if you play some rules properly. Otherwise, you're going to blow yourself up. Don't jump in on the first trade. Think of it as your tuition. One cycle to see what we're doing. Look at the webinars. Nobody was looking at the webinar. Look at it. It explains to you. Don't jump in. I sent the bias that said with a 36 limit. But that's a bias. I said, this is what I'm looking at. Obviously, you punch through that. And not by much. So if you look at it, here's 36.40. See the bottom there? Here's 36.10. We violated that. Friday was an exception. But so they were looking, what's the target? No, that's not the email. The email's for that. This was just the general area we're saying what I'm looking at. Now, of course, I had 3 days of no data. Even my phone had a hard time getting a cell text, not trace session charts, cell text, because cell voice wasn't working. Okay, so I lost a little bit time there, but that's not an excuse. But listen, I've sat in the positions where it didn't go my way. As long as it didn't go crazy, I just sat there and then I put my trade on, which you get a copy of when you remember, when this thing washes out. So most likely either Monday night or Tuesday night we have a trade. Well, I want to wait to see what kind of open we have tomorrow. More pushing down. Why am I waiting? Because we're at the cusp of it. If you think of everything else, I'll explain right now. Plus the seasonality between Rosh Hashanah and Yom Kippur. I think we're there. We'll see. We'll see. Again, my confirmation would be a big volume. So I'll be cautious. We have a few positions on. We certainly don't want to add. Our calls, our put spreads nailed it. Or we are holding some call spreads, but they're long duration call spread. So even though mark to market may not look good right now, hold on. It's not expiring tomorrow. And remember, you could have an option go down to 50%, 70%, and then within a week or two, based on some effects, boom, come back up and be a winner. So we're at unusual times. Volatility is very high. We just have to be careful. Yeah. All right. Canaries in the mine. The cold mine, I said. Yeah. Okay. We're definitely having a problem here in the channel with the transportation. And so that's really worries me the most. We had outside bar. Others did not issue outside bars on Friday. Transportation is the leading indicator did. So we're getting, timing wise, maybe we're ready to go up. Okay. But some key leading indicators also are falling apart or not holding up, I should say, probably a better word. So, of course, this is not much of a signal there on Russell. Now, utilities are telling us that the bonds are most likely overpriced. So you're probably going to see a little bit higher rates. Because the higher we go, the lower the prices, right? This is the yield to maturity. So, the compounding that goes on. And here's the inversion. So I was talking to a very cheap fellow in Fort Lauderdale yesterday. Look at the payoff on that. Why would you, but 4.2, I'm doing with the high. First of all, remember we talked about this is the weekly, this is a monthly R1, R2, R3. We got to get there. Remember? We were somewhere in here. We had this bar. Maybe it was because last week was this, we couldn't even reschedule it. I just, we lost all sense of work environment. And of course, I have it easy compared to others. Some people nearby are in very, very dire straits right now. So let's be thankful. But anyhow, we were here when I said, this is not enough. How about if they gun it? That was the word I used. They gun it for the third level. Well, we almost got there. That's close enough. That's it. This bar is all-time high for like last 7 years. I don't know what we're looking at, but that period. 5 or 7 years, what do we have there? No, for the last 3 years. That's right. Let's go to 5. Let's just, for the heck of it, see what 5 does here. Yeah, not 35. That's fine. Yeah, like the same level. Okay. So you can see that huge rise. Now, look at the nominal rate there. 4.2. Why would you want to be in 30-year, but it can give you 4.2, again from the government, principal and interest guaranteed by the good faith of a U.S. government and the fact that they can print reserve currency at will. And it's 5 years longer. This is 5, and this is 30. I'm saying that part is 5 times. It's 5 times longer the duration, and so you I shouldn't want to use duration. I'm saying duration is a bond futures term. So bond maturity term, but it's not the duration you think about like options. It's actually on the calculator. But say holding your paper. So this is creating a lot of problem for the the net savers. First we broke the covenant with them of net saving. We pushed them into the stock market. Now we're taking the stock market down, and the bondholders they have, if they want to cash out, they're not going to get much for it. This is the yield coming in, but you only get that if you hold to maturity. So we'll see. It's and then of course this is the biggest Ponzi game in the world, U.S. Treasuries. So because of the powers we have, keep that in mind. I don't know what to say. I don't know how to predict this. This is way beyond my pay grade. Yeah. So for this, I listened to Jeff Gundlach over at Double Wide. So that's probably more. He's far more appropriately positioned because of what he does and the size of what these do. I'm sorry. Let's go back. E-Trenders. Okay. A little bit more clarity, but you can see we're shooting down heavy, taking some lows. I like to look at transportation at a longer view. Is it gotten bad yet? Not really, if you compare it to that as a benchmark. But we don't want to repeat that. This was really, really bad. This is COVID, a scare, and the fact that we were not prepared for it. So, of course, market went to make new highs, and here it was a big move down transportation last year, but a year, almost about 12 months ago, and of course now we're leading down, and most of this is caused by, I don't know if that was UPS or FedEx. This is definitely FedEx that caused that. The warning they gave, and I just don't like the shape of these two. The slope, I'm saying, the relative slope of these two. We could look carefully there. It's arcing down. That's a 200-day, and then this is 50. So this is not a good omen. This is we're going to have more problems in the economy. But remember, market discounts the economy forward. So is it a clear case of what to do? No, of course not. That's why I'm a little bit hesitant. Why? I don't think we've been here before. And that's probably a safe crutch for somebody like me to run the way and say, I don't know what's going on. We haven't done it before. I need analog. I don't have analog. And there's no analog like this. We've never bought this much. We never had this many issues all at the same time. And we had a crazy guy in the other side, in the 12 time zones from now, saying, I want to use some nukes on you. Unless I get what I want, like a little kid, some bully in a schoolyard. Bullies are there because their logic stopped working. That's why they had to resort to being a bully. If you have good logic, you don't even need to raise your voice. It's that simple. All right, we're going to sell and a buy. Buy on the weekly, sell on the daily. And the sell has been good. We'll get to the Lowry stuff too, but here's you see where we're going. No more new highs. That's a good sign. New lows are busting up, peaking maybe, and that's the requirement for a bottom. Divergence? Not really. Divergence isn't clean. This should be a lot higher. We don't have. Go to VIX. Great job by Nancy. I don't know how we got out because I wasn't out at the time, but it went to 35 we were talking about. I think we had 37. We had a 29, 37 spread, I forget. Oh, almost there. And there were I believe there were we rolled out of September's into October's, yeah. Not sure we made money or not. All said and done. Okay, I'm just not sure. But because it was a tight spot, it was a complex. And of course, I still think if we're gonna see that big capitulation, we need one long wick above it like this. We need at least one day with long wick above this area, then we will be there. So be realistic. Okay, common sense goes a long way. You don't need a lot of education. Common sense goes a long way, just to see how to bet it against the VIX. I like the patterns. I don't like the values. Just go by values. SQ is going back up. I've noticed that it's still too low and it's too close to event at hand for this to have a impact. We've got to get this thing. I mean, let me put it this way: SQ missed this cycle, in my opinion. This chart has a predictive value. It missed this one. Based on the rules I watch, it missed that. So it's just too low, and we're already dropping. But we don't have any big dates back there that shows that we jumped up. The last one high was here. This is too far. You cannot. This doesn't work. Even this doesn't work. This high, which is April. No. This 6 months. No. This is last December. Yeah, too far. And so these low readings, both sigma and absolute value, no signal. Remember, you can't get all the charts to always give you signal at the same time. Some they do some regularity, some they miss, and some are just bouncing back and forth until more clear data shows up. Yields we talked about. Interest rates. I mean, look at housing down 20%. I think that was Case Shiller last week that came out. I missed it. I didn't get a chance to analyze it. I have to get a bunch of readings I've got to do to catch up. But I will. That's why most of the evening I'm going to be doing that. I'm saying, there's a question here. So that makes April 20. I'm saying, yes. What is market? Yeah, typically it's not a fixed rule for it. It's it is. I'm going to answer just a couple of questions for it because this can't be about you and I. Okay, I gotta get to everybody, but good to have got some questions. He's asking, yeah, but and I guess and there's some stuff you're saying that is already news, right? Like liquid issues in Europe, yeah. Buying MBS. Liquidity in real estate property, yeah. Well, if they're trying to get the raise up, buying MBS is not going to help. That's why, right? So if they're trying to break the back of inflation, because market is really dropping now. Here's on. So you won't be able to help it if we're down to full percentage now. But by saying one thing and doing the other, you got to stop. And their objective is really just to roll off, go to maturity. Market typically is about 6 months ahead of the real economy. Yeah. I mean, the 87 crash, that's what exactly happened. Bonds peaked in May. Then the stock market peaked in August, and you saw what happened on October 19th. That was 87. I have no idea. I gotta look into that. The premium for NQ, yeah. Too noisy at times, so I don't pay attention too much. It's noisy, but less noisy for yes, and I don't pay attention. Yeah. You know why? Zero arbitrage. Because of internet, those tools no longer are really that effective. Yeah. It just whatever it finds some art, it sucks it up instantly. So that's right. Let me move on. So we talked about TD. Let's go to TD. We talked treasury. Go to TD. Okay. 0.87. Is this real time? Yeah, this is real time. You have volume here. Obviously, V is the lead contract. That's October, and we're against F23, which is January. All right, that's it. And this is the term structure of the volatility itself. Not bad. 31. There's no premium there up front. I think we're okay. A little bit higher end in higher end in January. Excuse me. 0.91. This is we're near the low. I have to take it with a grain of salt, but I think we're very close. All signaling shows we're very close. The issue, and we've been net buyers. I mean, in terms of some affiliates, we have bought some stocks, not options. Why is that? And why am I pulling back on an option for PMT? Because vols are so high, so chance of being wrong on the payment that we give, the pricing we get, is too rich, is high. So I usually, when we get to this mode, I usually step back, maybe take one trade or two, or nothing, because at trend change, there's a lot of money to be made by market makers. Where do you think that money comes from? From you and I. Why? Because we treat it the same way. You shouldn't. When it comes to trend change, I think you're better off, at least my experience over the years, to step back a little bit. Let it happen. It doesn't matter if you catch the lows or the highs. What matters is get the trend right, and then once you get a little confidence, you gun it. You change size, you add size. Don't do big size. The biggest mistake I've seen people do is that, especially who are not familiar with market timing, or they believe market timing doesn't work. They want to catch the bottom, and they want to load up at that price. You know what that is? That's a Russian roulette with about 3 chambers full out of 6. Out of 6 shooting. So don't do that. Yeah. It doesn't matter if you catch the low. It doesn't matter that you have to have a big position at the low, because that's a little more advantageous. But what if you're wrong? You know, trading long and short, you're really about 25% of the time you're right. Yeah. It's not easy. So the rest comes from money management. So don't try to jump the bottom right now. Let this basing continue if you want to go long. If you want to get short, it's too late. Most of a short event is already out. Yeah. So, and that's the conundrum I'm in. Of course, I made a big mistake. As you know, I covered here. I had a long from here, a couple of days against me, and took off. I did not short. And then this was a 177 points drop, I believe, in S&P. I got shocked. I wasn't in. I wasn't losing. Remember, I got top tick there, but because we had the close of a day. But and then we were selling our options in there, our long call options. We're getting out. We kept our put spreads, and that gave us some money. But recently, we have taken some calls, and they're getting into trouble. But you know what? We look at our data, delta. We try to be positive or negative based on my bias on the delta, and I think we're a little bit longer than we want, but time will tell. But we don't do short term, we don't do weeklies, because I'm just too busy to watch it that closely. Plus, the premiums are too high. To me, the weeklies are the biggest scam out there after treasuries. Don't do that. Just buy yourself on by 2 to 3 months. If your signal is right, XYSS, remember, XYSS in a Black-Scholes model. Why? Why is that? Because of minutia. Why is minutia important? Because that's how it's priced. If X minus S is moving in your favor, forget the vol. It'll help you. But when you're wrong on the direction and the vol goes against you, because people get nervous because they're long premium, whether calls or puts doesn't matter. They're long premium. That's where the chaos starts, and you can evaporate that account real quickly. As such, because we have so many people in BMT, I got to think about that. I can't just pull the trigger because it impacts so many people. So some people will say, "Where's the trade? Where's it?" We're event driven. We're not on quota. If you don't think this is right for you, I understand. Come on. You just started with us and you weren't aware of it, you didn't watch the video, come to us, we'll give you your money back. We're not interested in arguments. We know what system we have, it works for us. That's how we got to be timer of the decade. We just have to, and this is unusual times we're in. This is the most sensitive, I'm sorry, time and price sensitive time of the year. There's this patch between like in mid-September to about mid-October. And if you read Phil Erlanger about seasonality, you see what he's talking about. So we're going to write this, but we're going to be careful. And if you just join us, first trade, one cycle, you're not in. You've got to watch. I mean, I'm going to put a trade on. You're going to see. There's a box. Let me show you what the trade is. Let me make sure what I mean by trade. Which means that when you go in and go here. This is the trade. Hold on. This is a trade. You're going to get one of these. I'm not giving that. And you for issue 366. 366, we just gave it, we put a bias out. You guys, we give you email. Now, we're behind. We're behind, and that bothers you, that's fine too. Remember, I do things in my schedule. And we've been behind on a bunch of stuff between COVID and this thing. But with Nancy's help, options have moved on. There's activity. And my job is to do PMT while we are updating what we do in HAPRDS. But here's what I'm missing here. Our emails. I'm going to put those in. So that you have a sequential like we used to do. And I'm going to go from now back. I'm not going to go and catch up what we were behind 2 months ago. But any email we have that goes to Time and Digest, you get a copy within a few seconds. That should be inserted here. And that's easy. I'll put in this so that sequentially we know what we did, because that's called I forget the date there. Huh? That's called September 8th. Okay. Yeah, September 8th. That's called being transparent. Sorry, I'm a little bit tired. It's been a tough 3 or 4 days. But I just want to make sure we have this. Also, I messed up all my files in ELD yesterday, and we couldn't send one of our keys out. But I managed to find it from another copy. Let's go here. This is one of my best indicators that I like. Look what it's doing now. A lot lower price. Obviously, we're also dropping here on the futures right there. But only 19 now. Not bad. Not bad. Okay. But this is how we closed. A little bit higher. It got fooled by this day, by Wednesday. And then dropped. So it could create a divergence here. I will be watching this Lucky Heart intraday. If I get a chance, I'll post a chart for you guys on it at Hamzy Analytics, my feed. PFT does not have its own feed, but I just shared there. Tico sometimes makes comments about it, but I'll look at that. Let's look at Lowry's. So I'm saying, what's the conclusion? We're probably on the last leg here. See where we are? There's a rendezvous point between the triple stock RSIs and also SP2. The preponderance of evidence tells me we're still very, very close. Now, it could be another 100 points in S&P. Don't get me wrong. I'm not saying it's a 5 or 10 points. But here's what I don't think we're going to have. We're not going to have a cycle and then down. I think this is doing it for now. Yeah. But I just want to do it stronger. Give me a flush. Get rid of the week longs. Let them get out, and then we'll just add to what we have. We're holding. We're not under pressure. We're going to add to it. Why? Trade small. Size kills. And you're going to miss the objective review of charts. I've got a friend of mine. He's a cowboy. Okay? And even when I call him to say, hi, how are you? Are you alive? He gets too excited. Why? Just all that adrenaline to him all day, all night. Don't do that. Take some time off. Maybe this was good. This Ian showed up. I just I had other challenges. Had to worry about the place we were. Can we get debris cleared so we can get some food in or people out or whatever? So, but it's also gets you away from the screens. Every once in a while, we all need it. Anyhow, I think here's a question: do I think 3 months, 6 months, 9 months from now we're better? Yes. I don't see us going lower. You know why? The pressure is too heavy on the Fed. And if the PPI, from the point of view of what do you call it? Jeff DeGraff, that's not an easy guy. Remember, Timer, I mean not Timer. Institutional investor, analyst of the year for about 10 years. Maybe not 10, maybe about 6. But I know at one point, what do you call it? Steve Schulman, his mentor, uh, and a good friend here. That's why I got to know Jeff. Was there for 10 years. Same methodology is passed on. As a matter of fact, I remember one time Steve shared with me, and he liked French wine, or a glass of wine. He was telling me, he says, of all the people you trained, all the people who was a student at Eaton's, all that, Jeff has an innate ability to really understand that kind of thinking and take this to the next level. And of course, you can see what he did with Rentec. You can join him on, I think, LinkedIn. Look for Jeff DeGraff, Rentec research. And it's a good one to have to read. So if that's the case, could we have for example, hold on, let's give you another example. One of the mistakes I did in 2009, I'd been in by the Chicago 1 year, that I thought the first low in 2009, which was right about the inauguration time, was the low. That was it. It took 2 more lows to get there. Why? The Fed and the new administration had their ducks not lined up as they were before with Hank Paulson in there. There's a big difference between what do you call it, Turbo Tim Geithner, and Hank Paulson. And so one's a graduate of Goldman Sachs School of Hard Knocks. The other one was Kissinger Associates. Long story short, we weren't there. I think we have a better situation here. The current Treasury Secretary, I'm not sure she's one of my favorites. I don't like her, inklings from Berkeley and all that. But she's a trifecta. She's been around at 3 jobs: CEA, Fed, and the Fed chair, and now Treasury. Nobody has done that. I think they'll be tough about this. But I think we're very near. Could we have another month of downside? Yes, it could. There's no guarantee here, guys. I don't have a crystal ball, So if you find one on, hey Dennis, if you find one on eBay, let me know. Dennis is pretty smart with this stuff. Yeah. Bottom line is, we're all making a guess, a calculated guess. We're hoping somewhere near we can do it. Now, you can't do this with future. You gotta do it with option. You gotta do it with option. That is, but you want 10% finder's fee. Why? Because the specialty of option. It's an option you have. If you're long option, not if you're short. If you're long option, you have the right to exercise on that. I'll decide to not to do it. I'll wait a few days. Yeah. What's happening to my DK? It doesn't matter. I'll hit it a little bit larger. I average it down with another, maybe a half size or a quarter size of the trade I'm in. Again, and wait. Again, not doubling down. Slowly. Just you build a position. If you can hold it. You can't go this with futures. Futures got instantaneous settlement plus a huge leverage. That's what scares everybody now. So be careful. But I believe what I'm seeing is beginning of that. So now, usually indicators are ahead, and that's what we're looking for. We want the indicators to turn first, then the money, so that we're ready to trade it at the correct price. And we may be seeing that. Again, seasonality says also Tuesday. The other side is we're so messed up everywhere that none of the past will work. Remember, early part of COVID, a lot of correlations broke apart. So we could see that too. So keep that in mind. Remember, my word is not last. My word is fairly early ones. We'll see. Okay, another question here. If it's not right, but why in Canada? I have no idea for it. I mean, that's a good question. What happens if there's a nuclear event? I mean, it would be such a expansion of this war in Europe, which is unjust war. Ukraine did nothing to provoke them. And so you have an egomaniac madman who thinks probably he's going to die. I think he's got a death wish in a way. Or he's going to die. And he wishes actually not to be alive long term because the thievery, what he's stolen from the Russian states, from the population of Russia. Net. With his bunch of cronies and all the mobsters are involved with him. I mean, it's a first, what do you call it, mob capitalism run in a third world country, which is basically a gas station. Yeah, it's a single economy, a single sort, like a commodity economy, which is called oil. And they need us badly for drilling, for tools, for I don't know if they're doing any fracking, but then they need even the liquids. But they're dependent on us quite a bit. That's why Rex Tillerson all of a sudden became a Secretary of foreign secretary or whatever, Secretary of State, which I did not approve of, by the way. But I said, okay, let's see how this thing play out and why and so forth. But these guys have gone back 50 years. No chips. Look, you have to buy shells from Korea and drones from Iran. You effed up. Okay, please. I shouldn't say that word. You foxtrot out. You foxtrot out. Yeah, you're done. And I think somewhere in here, somebody would probably liquidate him. Yeah. One of these generals at one point with, there's a lot of issues about him. But does he raise the chance of going to a nuclear event? Yes. What would happen here? That could be a flush event, yes, absolutely. Because here's what's going to happen. Short term.
Long entry CI alert for MNQ.
Thank you. This is out of it. This is on the background. I don't know it goes on. I'm sorry. Okay. Let me switch. Here's another screen. There's a multiple screen here. Hold on one second. Here's the thing. Oh, yeah. Oh, Jess. Oh, Jess. Yeah. Okay, that's a good long, actually. Okay. Here's what's going to happen. I'm not trading it. I'm just looking at it. This is our new system. The non-ORB system. Definitely would make it event. And here's the problem is going to be, you could have a 500 points down on S&Ps or more. I mean, that's 5,000 points on the down. It will happen maybe in half an hour. Because the market will freeze, basically. You're going to have absolutely no buyers. Now, I don't think he would do that. I don't think as shrewd and as calculated Putin is. As a lawyer by training, his work for KGB in Dresden. I don't think he would do that because the punishment, the collective punishment of his people and his cronies and all the oligarchs are going to be extremely massive. And the problem we have is that we can't give a nuke to a let's say tactical nuke. One of these small jobs, the 0.2 kilotons to Ukrainians and say, you shoot it. And you can do this with the cannon. You go do it. You don't need a fancy delivery systems like a F4 or whatever. But we can't do that because you have no control. Probably the custody, chain of custody of the nuclear device. No. By the way, at Princeton, we played a game called SIOP at Woodrow Wilson School. It was for the right guys. It would take 5% of the person. So in your second year, could apply. The top 5% of the school had a chance to get in. I don't know how I got in, but I can assure you I was not in the top 5%. 60 students, the class is 1,200. We played a game called SIOP, Single Integrated Operational Plan, which is what happens in the football, which is with the president, with the coach. We never had a scenario like this. That was late 70s. We actually was a different animal. Ukraine was part of Warsaw Pact. It was part of USSR. This is pre 1989, where no 89, yeah, pre 1989, where B2 flew and the Berlin Wall fall apart, and then the following year, I believe, was it Chris? No, the following year it was, or 92 it was, I think, that there was a coup d'etat on Black Sea, Sochi, what Gorbachev was, and actually the USSR went away, and then Putin came in at 2000. So Christmas, New Year's Eve 2000. So we never had a scenario like this where it would happen in the Russian dominated or influenced area of Europe. We always had scenarios from West Germany and France and Northern Italy type of a deal, or Japan on that side, but never on area that used to be part of our USSR. The risk you're always going to have in these, if you call it war game, because at this moment we're thinking, people are wargaming at Pentagon. There's a whole group on this, that do a lot of what-if studies, and they have sensors, and they do estimates of movements, and it's a complex model. I'm sure it's gotten a lot better over the years. The problem is, and of course, we did not have access to that because we were students. We didn't have clearance. To be a very watered down version. I just don't see how we could be wise on a response using nukes ourselves. We probably, because escalation will, usually when that happens, escalation goes up real fast. Okay, you don't want to go there. You're going to go there. So I don't want to be, I don't want to be in charge right now. And I'm glad who we have is it's not maybe what people wanted, but it's a lot better than the guy we had before for the analysis of this, because this is going to get dicey. If Putin uses a nuke, this is going to get very dicey. And you have to really execute well as far as a commander in chief. And the guy before that didn't have the IQ. We all know that. Plus, he was a Russian asset. So that makes it very, very dangerous, actually. Probably would do nothing. Next thing you know, Putin is in Berlin. So, I don't know. That's a tough scenario. Ford, why do you have to ask so many tough questions? No more questions from you. Many questions from you. Come back next year, sailor.
Long entry CI alert for MNQ.
Thank you. So, hey, I'm kidding with you. I'm babbling. I'm a little bit tired, but that was a good question. Let me move forward, guys. Larry's up and down volume. Okay. Huh? What happened here? Why am I not getting data? Huh? Okay, something's wrong here. Okay. Oh, because New Year? Okay, there's something here on the data. All right, fine. We'll find out. This one's plotting right. This is this more difficult one. Hold on. Okay. This could be permission. We did some permission difference. I apologize for that. Yeah, we'll get it fixed. This is not loading yet. Hold on. What are we waiting? Why is it waiting for data so long? Don't we have connection on? Yeah, connection is good. Yeah. Connection is good. Yeah, we have green and blue. Sorry. Last but not least, well, I want to wait for this to load up. Okay, let's talk about EMD. Mid cap, big short, still continuing. Short here has not changed yet. On RTY, still short here. I believe this was also short. This is fairly reliable, it hasn't changed yet. So, but it's my first time really I'm doing a bottom fishing with this. Because since we got this working, that came from Larry's also. But this is a buying power index. Uh, the longs are more reliable than shorts, but that's the short is. And so, and this long was fried. This was a long that got fried. The short also went fried. So I would like to see this thing turn around. I don't trade by this, but it's an indicator that gives me a feel about what we were done or not. You could see on Russell, a little bit of this says we may be done. Again, once we get way past, it will be a real test, but you can't trade then. So as you look at it live, it smells that way, but maybe not there. Again, I don't know what's going on with the data here. Let me change something here. I have data coming in here. Hold on, let me check something else. No, but data is good. Data's coming in fairly good here. I don't know why we're not getting that. I apologize. Sometimes they do maintenance over the weekend. I don't know. So let's go back here. We go to last chart here, and that should be good. Okay, that's good enough. Okay. So what the heck is this? Sorry. All right, let's see what we have here. Again, keep in mind the slope of the curve. Okay, and look where we are. Yeah, guys, I think we're done. And this doesn't have the tonight's drop, but if you think about it, we take out everything out. We might be below 10. Let's go to 5 years. Let's see, get a better perspective. Yeah. Now remember, when it rotates, it's going to rip your face. So if you put a trade on, be very careful to the short side. If it stops improving, go your way, let it go. Just drop your stop. If it doesn't go your way, do not negotiate. Do not beg or try to give it a chance. There's no such a thing. It's gonna rip your face. That's how this thing happens. Okay, 200 day number of stocks above 200 day. Again, I'm tired. I'm sorry. You can do this yourself on stockcharts.com. Here's the symbol that's highlighted. We're taking the new lows out, and look where we're here. We're really, really flushed out. We're about where we were in December 2018, which is a huge drop there, right? This one. Okay, but this is the 2020 COVID. Obviously, that's understandably unusual, but you could see you're going to start accumulating. Now, for my high net worth affiliates, we're beginning to buy stuff like NVIDIA, Boeing, Amazon, kind of a mix of tech and consumer staples type. We're not going to touch anything that's like my sister's in trouble. Electric utilities and all that because of the interest rates. Just stuff that everybody needs. There's some technology in it, and it's a big cap. I don't want to be buying a small cap right now. Probably will give me a better yield, but that's not no place to hide if things get worse. Remember, if things get rough, they're going to take those boys to the woodshed really bad. The Russell 2000. I don't want to be there. I'm happy to hang out inside of Google or Microsoft or Amazon. None of the prices are lower because of splits. Okay? Let's see if we get that chart back and then we wrap this up. I'm not getting this back. This I know what's wrong. I have to talk with. There we go. I got it now. Okay, that's good. This is incorrect symbol. It shouldn't be incorrect symbol. Hold on. I'm sorry, guys. Take your time, but let me take a look at this. Yeah, it can be. There could be a problem here. What are you talking about? I'll take care of this. No, tomorrow. Yeah. Always. I'll send a notification. Oh. Okay. Here's my question. Have I answered what you guys wanted to know? I'm sorry I missed Thursday, but I was nowhere near where I could reschedule the Wednesday. I moved Wednesday to Thursday, but that was that morning. I knew things are going to be bad. I didn't know how bad it's going to be. I really think it's just going to come by and go. I didn't know it was going to be this strong. But we came back with a day with power, and the following day with things. Right now, power in some parts of Fort Myers area is probably 2 weeks. So we're only 60 miles away, and I think we were fairly. So Any questions for me, guys? Ford, good questions, but you're killing me. Oh, he's a good man. I give him one. Anyhow, we'll see you next Wednesday. Now again, just so you know, if you know you need to know the calendar. Once you sign up, it comes back to you on the setup there, which is on the members page, right there. No need to do more than once. It brings you back, and then I'll just put the change date there. But we'll try to drop on this Wednesday. Again, short and sweet to the point. On the ORB training system, we're still open for some free trials, not too many, because the room is full. It's busy. But we're going to probably wrap it up and we'll move forward. But I said that our price is going up, not here. We're not changing price here. We were changing price at StoneX, because it's just hit out of the ballpark for the 400%. I mean, that's 80% a month. We did a very initial price up just to get it going, and it was a friend of mine. I didn't want to go anything what I think is worth, but now I have proof. I don't know. Somehow thinking I have it in his pocket, so that's what. A lot of my cousins are in there, so forth. And we keep it at that. Don't want to make it commercial. It's just really for a way to have untouched, results. Very orderly, run by third party. Money belongs to a fourth person. Nothing I'm involved with. I'm not saying the code. As a matter of fact, we just issue them a code for this month. We issue every month. Plus, we added some. Something we did the retail package. We added door lock boxes. Now the machine won't talk to you, but at least tells you what you're doing wrong. It comes back and says, "Hey, this you got a wrong symbol for the rollover." That sort of thing. And the key part we're doing is version control. That's it saved us quite a bit because some of our people are not the strongest. I mean, tech savvy is not one of their strongest suits, and by doing what's called version control, the encryption itself knows which is the file to use. So you cannot use the old file. Yeah. And last night I had a little mistake in it. I fixed it. We sent the copy out again later last night, and everything is fine. Thank you so much. I talked too much. My apologies. It's just been a long few days. By Wednesday I should be better. Any questions for me? Last call. Dennis, thanks for attending. All right, guys, we'll see you soon. Hey, Joe, how are you? Hi, Jason. So we'll see you. Hi, Ralph. Appreciate it. Hey, of course, hi to Raj. See you guys on Wednesday. Okay. We probably need that. We probably do. Now, Tuesday's going to be slow volume because of Yom Kippur. I think it's a Tuesday sunset, sundown until Wednesday. So if the actual Yom Kippur is on Wednesday, we're probably going to do it also late on Wednesday. Okay, we'll push it down a little bit on this time so that the folks have a chance to be of synagogue. We have a lot of folks from the Jewish faith, and this is a key day for them. So let's accommodate them a little bit. Thank you all. We'll see you soon. I'm going to post-process this and then post it on the YouTube.